Hello, everyone, and welcome to this BIA webinar on the spring statement. What does it mean for life sciences? I'm joined by my colleague, Martin Turner. Hi, Martin.
Hi, Steve. Hi, everyone.
Martin's back from a great trip abroad, so fresh back in, straight into analysing what the Chancellor has been up to this week. And I hope that in the next half an hour we can answer your questions, give you a quick run through both what was in the spring statement and some other things that are going on, because in a sense, there's not tons in the spring statement that was headline news for the sector. But Martin, I think you've done some analysis and you've got some of the detail that's really quite important for life science companies.
Thanks, Steve. Yeah, so as you said, the spring statement was not the biggest of events. This chart from the Institute for Fiscal Studies for me shows why the Chancellor chose to hold any type of fiscal event. She has committed the government really to only changing tax and spending once a year in an autumn budget. So the spring statement is usually when she just updates on, or the Chancellor just updates on the state of public finances, economic growth, etc., using the Office for Budget Responsibilities forecasts. Um, but there have been some geopolitical changes, some need to increase defence spending from the Prime Minister, and public borrowing has increased, sorry, meaning the deficit has increased as well, and that's what you can see in this grey box in the chart. So basically, um, in order to meet her own fiscal rules, the Chancellor needed to slightly adjust uh, government spending, and that's the green line that you can see starts off lower than the yellow line, which is the forecast from last autumn. So the news cycle has already covered the big headlines. So we're going to cover the what was in there for life sciences, and there was some. Particularly, the Chancellor talked about cutting down on fraud being one of the ways that the government would reduce government spending. And there are potential, or there is, as a result of that, there were some announcements on R&D tax credits, which are very relevant to our members. We, of course, know that our members have been having some difficulties with HMRC recently, increased compliance checks on claims going in, delays to payments going out as well. So we know this is a problem, and we've been meeting with ministers and civil servants on this and other issues. Um, so the first one to note is a consultation on R&D advanced clearances. This is a voluntary scheme that companies can go to HMRC to ask, basically, will my R&D tax credit claim be valid R&D? It's not a hugely used scheme, particularly for life sciences, because life science companies are pretty confident that what they're doing is R&D. So what this consultation is about is basically making it mandatory for certain sectors to get this advanced clearance before submitting a main claim, and essentially sectors that are considered to be low risk for fraud to not have to get this advanced clearance. Now, this is quite welcome, because we know life sciences is a low risk sector for fraud. The government thinks that too. They've been very clear to us, and we actually said, well, why don't you just allow life science companies to be kind of fast tracked through the main R&D tax credit system? Um, this advanced clearance consultation essentially does that. It says if you're a sector that HMRC doesn't trust, maybe hospitality, when it comes to R&D, because it's obviously a sector that does not do an awful lot of R&D, then they will do more scrutiny on that, and life sciences and perhaps other sectors won't get so much scrutiny. So we think this is really welcome. It's just a consultation at this stage. Of course, our Finance and Tax Committee will be looking at that and responding in detail. HMRC is also bringing in new powers to allow it to tackle rogue tax advisors. Again, this is something that we've highlighted many times over the years in these webinars and elsewhere, that there are some tax advisors out there that are encouraging companies that are not really doing R&D to make these claims, and that's giving the R&D tax credit system a bad name. It's increasing the cost to the exchequer as well, and it's one of the causes of all the changes that we've seen over the past 5 years or so on R&D tax credits that have reduced both the value of it somewhat for loss-making biotech companies and increased that scrutiny that has been causing genuine life science companies some difficulties. So again, that's good. We've been saying that they do need to crack down on these advisors. And then finally on HMRC and R&D tax credits, they're employing more compliance officers, not just on R&D tax credits, across the board. But again, that's really good. But crucially, we also need those officers to be experts in, or at least understand R&D and life sciences as well, because we know, again, those inquiries that our members get don't always quite understand. They don't seem to understand clinical trials and the innovation that's happening in our sector. So quite positive on that
Thanks.
front, I think, Steve.
Yeah, no, thank you. I mean, it's good to see that the putting a pineapple on a pizza approach to R&D tax credits is going to be a thing of the past. It's great that there's people who can both do the checks, and I think, as you say, that differentiation between sectors where there is a known and understood clarity around R&D, which most vast majority of life science companies fit into, will be good. And I think crackdown and disincentives around some of the no win no fee stuff that we've seen sprouting at the edges of R&D tax credits is also helpful. So hopefully that will streamline the process, even if it doesn't change the headline rates, and will make the system more effective for life science companies. And I think it goes to testament to some of the stuff that BIA members have helped us put in front of the official levels and the ministers in the Treasury. So thank you for that.
Yeah, absolutely. Elsewhere, there was a 5% increase in visa costs across the board. So obviously one that will increase those costs for BIA members just above inflation, really. PICES, so this is the what's called an intermittent trading venue, something that we have supported, that the London Stock Exchange has been leading on. And it's a new trading venue for private companies to allow them to trade shares, essentially, not raise fresh capital at the moment, although that is, we understand, somewhere down the line. But this is a good initiative to try and improve the UK public markets one step at a time. So 2 announcements have come out. There's a consultation on a stamp duty exemption, quite a technical consultation, but basically saying there'll be no stamp duty on those shares traded, which is good. Not so good is that HMRC has said that where EMI share options, so enterprise management incentive, and CSOP, company share option plans, where employees have those kind of tax relief enabled share options, where they don't mention PICES in the paperwork of those options, where they don't mention that PICES is a trigger event for the exercise of those options. PICES trading will not allow the tax relief through those schemes. We don't quite understand why HMRC has taken this approach. It's not been welcomed by others in the financial services sector, so we'll be looking at that. If you can, if PICES is mentioned in the paperwork of those share options, then obviously it's fine and they can be used. That's the current position of HMRC.
So Martin, maybe I can have a crack at this one too. So PICES, because I think this is one where we probably need to go back a little bit into the history of what it is and how it fits for everybody. So it's one of the ideas about how you can make the stock exchange and public markets work more effectively for starting and scaling companies, particularly scaling companies, by having them pop up for a day or two as public companies and then go private again. It's not yet in existence, but they're building the rules of the game for how this is going to be in the future. And now we've got the details of how the tax treatment of how things that operate in that new game are going to play at some point in the future. And we think this is sensible for there to be stamp duty exemption so that people can use it, but it doesn't seem to make sense to not make it compatible with the options that that employees might get in an early stage company, because point of it of PICES in itself would be to enable, in my view, early stage management teams a couple of years into the business, if it's going well, to be able to exercise some of those options, be able to get some money back out of the business at one of these moments, one of these events, and that feels like it's compatible with risk being taken by going into an early stage company as an employee. So we think it would be consistent for it to be treated like that. It looks like it's a technical one about them saying that it wouldn't be unless you've written it down. Well, nobody's writing it down in their statements now because nobody's operated under Pisces, but we're not lawyers. But if they're going to say, if you're thinking about doing this in the future, it might be worth putting a phrase in about Pisces. I think we'll get into the detail, but it's interesting to see that this is about building the rules of the game for where it may be in the years to come, and hopefully this will be a useful scheme. Nobody's operating it yet, but we're trying to make sure that the BIA rule is operating effectively when it comes in 2 seasons' time.
Well done for getting a football analogy in there.
There'll be more now, Martin. You've
linked, well, not really linked, but another EMI mention in the spring statement was a positive mention of it and its ability to help startups and scale-ups. The government sees the value of them along with EIS, the Enterprise Investment Scheme, and VCTs, Venture Capital Trust, both tax-advantaged mechanisms to encourage venture capital investment into early stage companies. The government sees the value of those schemes and says it's going to hold some roundtables in April on how they might be used more effectively to support economic growth, which sounds great. We're obviously going to be aiming to be involved in those roundtables, and generally the mood music sounds positive on that. We know things like the lifetime company allowance of 20 million is a limit on the value of those schemes, and that's something we've pushed for in the past. And it's worth noting that pre-general election Labour documents such as the Startup Scale-Up Review led by Lord O'Neill, which is welcomed by the now Chancellor, and also a prescription for growth, their life sciences plan, both had very positive mentions of EIS and VCT. So we're watching that one with interest and looking forward to engaging. And then finally, sorry, Steve.
Yeah, I think we know how important these are for the formation of angel syndicates and getting early stage companies going. We know that there's been challenges around the edge, and we also know that there's not a massive sort of spike on the use of these schemes. They've stayed fairly static in terms of amount of money. So I think if there's a way in which this can be revitalized or new ways of engaging communities or angels into growth sectors, that's what they're thinking about here. We'll engage. There's some good opportunities.
Yeah. And then finally, pretty much in the small print, but there was a small mention of looking at ISAs, so individual saving accounts, and the balance, they describe it, between cash ISAs and stocks and shares ISAs. This is part of the wider discussion about improving the capital markets and investment in the UK economy. We don't know what they're thinking. The previous government did add on an extra, I think it was 5 million or something like that, 5,000, that you could invest through a stocks and shares ISA if you're investing it into UK stocks and shares. So they might be thinking along those lines, or they might be looking to reduce the cash allowance and increase the stocks and shares allowance. We don't know, but again, one that we'll be looking at.
Yeah, I think this was one where there was quite a lot of speculation before and press talk before the spring statement, and I was half thinking that maybe they would indicate a direction of travel or do something big in this area, which might precede the autumn statement. But in a sense, there's not very much actually in the documents, and maybe it's it's one that hasn't. It's an announcement that it didn't happen rather than an announcement that did. But I think we might see some change to this in the future. It seems strange that we're incentivizing savings into cash rather than savings into growth equity across the board. But yeah, I suppose it would be a big change if it happens, and then they want to get it right. Again, we imagine we may see some more of this in the autumn, I imagine, Martin, but we don't know.
Yeah, exactly. We're going to take questions at the end, I think. Do use the Q&A function to do that. I see one person has, so we'll come back to that at the end. That's great. So sticking with things that we were kind of expecting. So I'm just trying to move on. There wasn't much in the spring statement about the Mansion House reforms. This is the commitment from the pensions industry to invest 5% into unlisted companies and part of broader pension reform to increase investment and also to improve savings returns for pension savers. Not a huge surprise that there was only a very brief mention of this. We know that the pensions investment review within the Treasury is still ongoing. Torsten Bell, the fairly new pensions minister for this, who's a new Labour MP, was leader of the Resolution Foundation. He's actually written about this topic along with other challenges that the UK faces. So I think he's a good minister to have leading this work, and we know he's engaging with the sector and other sectors ahead of the launch of that, the publishing of that review between now and probably June.
Yeah, I'm surprisingly hopeful, as the Observer review of the Torsten Bell book says, that something will happen on this. It's a shame it hasn't happening faster. I think we want it to happen faster, but still underway. But nothing in last week's in the announcements last week.
Yeah. And finally, also one that was mentioned in the spring statement, but only briefly, was the industrial strategy and the development of the life sciences sector plan. We're in phase 3 of that at the moment. We've been very busy engaging since the autumn through first the industrial strategy green paper consultation and then task and finish groups on the life sciences sector plan. And we're now in detailed policy design with government. We're obviously feeding in as much as possible and attending roundtables with ministers. And there was actually a Downing Street roundtable yesterday that our chair, Dan Mahoney, attended. And we don't quite know when the industrial strategy will be finalised and published, but it's expected to be around the spending review, which is expected to be in June or July. But we do have another webinar on this on the 24th of April, so please do go to the BIA website and sign up for that, where we'll dive into much more detail on what we've been doing and what intel we have as well.
But again, I think this is one where, you know, nothing has come out of this schedule. Nothing has been brought forward. Nothing has been sort of prioritised and moved out of sequence. We still think we're working towards this, and that broad scope that the government have of summer is probably where we're imagining some of this will land.
Yeah. So, what else is going on, Steve? What's this quote about?
Event, dear boy, event. So yes, if you know your history, you'll know this is Harold Macmillan, Super Mac, the prime minister in the 1950s, who was asked what is he worried about in the future, and he always said, you know, what prevents the plan from happening is event, dear boy, event. So we thought we'd touch on some of the things that probably weren't in the plan but are important for the sector that's going on at the moment, and people should probably be aware of or maybe will be deeply involved in as well. So first of these, as you say, Martin, is the NHS medicines rebate debate, obviously known by the acronym of VPAG, both the voluntary deal signed between the ABPI and the government around medicines pricing, but there's also a concurrent statutory scheme which is under formal consultation through government schemes around the extent of the rebate. You probably followed this if you're in the pharmaceutical industry, but it's a really big issue. The big thing was that the rates that came out were unexpectedly high compared to the expected deal, and this has caused and came out right at the end of the right up against Christmas. So this has caused some concerns around and about. If you've not seen my blog on reflections on proposed drug pricing changes in the UK life science sector, it's on the website. I'd encourage people to have a look at that. That's really posited around some of the arguments and some of the challenges that we're seeing, particularly around the statutory scheme. Most companies are in the voluntary scheme. So it's an important one because I think that it's a prism through which many global boardrooms are seeing the UK as a medicines market at the moment, and unwelcome late news means that it's something that needs sorting. And Martin, you've also put on this the interesting paper from the America First Policy Institute, which is a Trump-inspired group in DC who are putting back out again their thinking around how countries around the world are, in their firm terms, freeloading on US innovation, And these, of course, touches on things like price controls in European countries, of which a VPAG could be considered part of it. So I think the context here is not simply the UK scheme in itself and how it operates, but also the American political lens on these types of schemes as they operate in many countries around the world. So that's why we've put that in. And that's something that's obviously moving and current at the moment. I hope that we'll see some resolution of it. I know that the ABP are engaging with the Department of Health on this at a very high level.
Yeah, yeah, and global biopharma execs are in town next week in London. It just happens to be in London that the biopharma CEOs roundtable is taking place. It takes place around the world each year. It's in London next week, but they will be in town meeting with government officials, we understand, as well as their own private discussions. And I'm sure this issue will be top of the agenda, definitely. But this American First Policy Institute, I think it is important to realize that this isn't just a UK discussion. There's these challenges across Europe, but also there's going to be pressure coming across the pond from the American administration as well. Which leads us nicely on to Donald Trump's much talked about imposition of tariffs already announced for cars next week. What Trump is calling Liberation Day and others are calling World Tariffs Day on the 2nd of April. We will find out, or possibly before, you never know, whether tariffs are going to be implemented on pharmaceuticals and many other sectors as well. This is very much a hot topic.
Yeah, and I think what's interesting is that our colleagues in Washington DC, the Biotechnology Innovation Organization, the US organization that's sort of equivalent of us in the UK, have surveyed members across the US, and according to their findings, 90% of US biotech companies rely on imported components for at least half of their FDA-approved products. So you can see that they are very concerned that the imposition of any tariffs at US borders could impede access to cures and stifle innovation. And I think it's really good that the voice of US biotech is making the case in what is largely an internal American discussion, but we need to be conscious of it for reasons that will become apparent in the next slide, Martin.
On the cars, that the Trump administration has been quite clear that it's components of cars as well as the cars themselves. So one would expect that to be applied to medicines as well. Yeah, problematic. And then looking at the next slide. So I thought that this was quite interesting, both the left and right slides. Obviously, on the left, it shows that by value, so really we're talking branded, innovative medicines here by value. Ireland has a huge amount of export to America, but UK is in that top 10 also. And the right-hand slide shows that we do have a trade surplus with America on pharmaceuticals. We export about twice as much as we import by value as well. So this is clearly a threat to our sector.
So nothing's happened yet, number one, other than there be lots of talk. And the reason why we're putting this up now is obviously if it were to happen, it might happen on Wednesday, but we don't know. But I think it's just useful to get some sense of this, and particularly if tariffs were to be imposed in our sector, this would be a big change on things as we really since biotech's been invented, and would be significant costs. And you can see that people are concerned about it. So I think this would go to the top of any agenda if it were to happen. Who knows what this will be like? We're just making sure that we know we're thinking about it, and we've got some data and some understanding as to where it might be. So that's why we've put this up.
Yeah. Great to see we've got questions coming in. We've got a couple more slides left. Please do add them to the Q&A chat and we will come to them in just 1 second. But moving on, if my computer will do it. So we thought it'd be just helpful to put up some open consultations. There's a lot going on, a lot of government activity, a lot of parliamentary activity, as you can see here. So some of these consultations from HMRC and Treasury are related to the spring budget, already talked through. DBT, the Department of Business and Trade and Treasury, have a consultation on small business access to finance, but it is very focused on debt financing. So obviously equity is the bulk of what our companies in our sector use, but if you're interested in responding to that, please do, and also please do get in touch with us. We're going to send the slides around, and there's after this webinar, and there's hyperlinks in this slide for you to go and look at those consultations. The House of Lords Science and Technology Committee holding a review into financing and scaling UK science and technology companies. Obviously, we'll be responding to that. The Treasury Select Committee in the Commons is holding an inquiry into the National Wealth Fund. This is primarily a government fund to invest into infrastructure, but there has been quite a lot of talk about it, particularly supporting engineering and biology and infrastructure for that kind of scale up of fermentation facilities and that type of thing. So we'll be inputting to that as well. And then finally, the Public Accounts Committee, also in the Commons, is looking at UKRI, the big research funder, and how effectively it is spending its money as well. So that will be an important one, especially as there's going to be a new CEO, and there's quite a lot of leadership change at UKRI as well. So that will be one to watch.
Yeah, and UKRI, of course, includes Innovate UK, which does important schemes like the biomedical catalyst. So, yeah, we need to make sure that they understand the value and the importance of backing early stage companies and companies that may or may not succeed, but risk and the Public Accounts Committee are not always easy bedfellows, but I think we should encourage them to see the opportunity and upside of investment in economic growth.
Yeah.
Anyway, Martin, back to upcoming BIA events.
Yeah, we've got some great events coming up. The webinar on the life sciences sector plan and spending review on the 24th of April. Please do sign up for that. But some fantastic regional events in Cardiff, in Edinburgh. The Startup Festival will be in London, Tech Bio X in Cambridge, and the highlight of the summer, the BIA summer party on the 9th of July as well. So please do go to the BIA's events page and sign up for those events.
Look forward to seeing people at all of the above. They really are good, and you get to see colleagues as well. So yeah, do please join us. Let's take some questions, see what we've got.
Great. Jim Clark first. Is there any concern following the statement this week that the MOD will be taking the limelight, funding, parliamentary time, etc., from life sciences and DSIT, or is there hope to come from the industrial strategy?
Well, undoubtedly, we saw in the spring statement the rebalancing of this of the public spending towards a profile to defend the nation and democracy in Europe, with obviously the geopolitical events of the talks in Ukraine and the positioning of the American administration on this. So yeah, the answer is yes. There clearly is a new focus. Do we think that is to the exclusion of everything else? No, I don't think so. I think still continuing to grow the economy as the central mission of the government, and DSIT, DH, the Department of Science, Innovation and Technology, the Department of Health, Department of Business and Trade are all focused on the key growth sectors, which include life sciences. But yeah, it's undoubtedly there's a new context.
Question from Peter Cousins: when will the ERIS scheme for SMEs with high R&D spend start? So this is R&D tax credits. This is the enhanced rate scheme that the BIA fought very strongly for over the past few years, when the previous government reduced the rate down to 18%, and we got it back up to 27%. Peter, my brain is possibly still in South America, and I feel like you're testing me, but I'm pretty sure it started in April 2024. If not, it'll be next month. But I think it's already in place, is my answer, but I will check with our tax experts as well. And then we've got an anonymous question. Private financing for early stage life science companies is particularly challenging, yeah, unfortunately. And in the UK has been compounded by a lack of public investment in non-dilutive grant funding in private companies. So Innovate UK funding particularly there. What are you doing to increase the level of public funding options for early life science companies? you want me to take that, Steve, or do you want to
Well,
crack?
let's sort of go across the waterfront on this. So uh, the key thing at the moment is the spending review. The spending review of the government is happening at the moment, and we are making the case for the effectiveness of the schemes that have been delivering much of this for UK early stage life science companies. So obviously the effectiveness of R&D tax credits and the processes by which they are administered. We talked a little bit about that at the beginning. So making sure that that remains both strong and usable and utilizable by early stage companies is core to what we're doing. Second, many of the schemes are administered through Innovate UK, so making sure that the government and UKRI and others understand the value of schemes like the biomedical catalyst, which have been important and transformational for certain companies at certain times. We're making the case for that with partners in Innovate and partners in UKRI, and it's great to go to a good event about that a few weeks ago where we can bang the drum and do that. And then I suppose the other area where I think of us doing this is by support for the creation and continuation of the British Business Bank as an entity that can invest and can invest off its own balance sheet. Obviously, that goes through investment vehicles and then into UK companies. But I think that's also an important part of the continuum, as well as making the case with some of these opportunities in VCT and EIS for, can we do more there to leverage money into early stage companies? So, as well as the Mansion House reforms, which are not going as fast as I would want, but are the way in which, for the long term, I hope we can increase the level of UK wealth invested in UK innovation, because, as you know, we're largely dependent on overseas money in our sector for much of this. I hope that's helpful. And Martin, you may have more to add.
Yeah, no, I completely agree with all of that. And hopefully on the 24th of April, when we go into the sector plan, industrial strategy and spending review, we might be able to say more as well. But I think this issue is really almost, if not top of the agenda in the life sciences sector plan. Government really recognises the challenge for funding early and late stage companies. So it is really important. There's a lot of work going on, and BIA is at the heart of that.
Yeah,
I think,
we've got great science in the UK. We've got great management teams. The things that hold them back is access to money at the pace that's needed, and we've increasingly getting some good places where you can do that science if you've got people and money. But it's putting all of that together at pace is really what we're trying to do, and that's why access to finance is always central to the work that we're arguing for with government.
yeah. If you go to the webinar chat, everyone, Stephen Gibbons has helpfully clarified on that enhanced rate R&D tax credit scheme. So it was effective from April 2024, but basically, if you're putting in claims now for your end of year 31st of March 2025 financial year, that's when it will be applied to, essentially. So it's about to kick in. So thank you, Stephen, for that. Finally, question from Isabel Ter. Are discussions with DHSC on VPAG rates ongoing? Any progress in sight?
So, so the formal statutory consultation is open, and you can put formal submissions into the DH on that. I'm aware that the ABPI colleagues who minister the voluntary scheme and do negotiation on the voluntary scheme are in contact with DH officials and ministers on that. So yes, discussions are ongoing, both on voluntary scheme rates and on statutory scheme rates. Any progress in sight, I don't know, is the simple answer to that. I hope so, but I'm not party to those discussions. But I think that the cases are being put, and there is open dialogue on those issues. People, I think people understand the score, and those dialogues are happening in the way that I would expect them to be. So sorry, I can't help you there as well with a second one of those, but certainly on the first one, it's all happening.
Yeah, and another one I'll be from Emily Foggett. What opportunities do you see for the life sciences sector following the recent announcement that NHS England will be abolished?
So I think it's I mean, the stated objective of DH doing this is to release money for frontline activity. Obviously, there's a period of change. Sometimes things have been slow getting through the double bureaucracy of Department of Health and NHS England. Having said that, there are bits of NHS England which have been drivers of schemes that have made a difference for the life science sector. So so I think the opportunity is to make sure that schemes that are delivering rapid adoption of innovation are protected in the change. That we get people into seats and clarity around who's doing what as fast as possible, because something that can happen when you have a reorganisation is stasis or people sitting on their hands. So I think we've got to push for this to be done speedily. And then I think the direct link between the growth desire of the Secretary of State for Health, Wes Streeting, and our sector is clearer and more obvious in a Department of Health context. Obviously, the Office of Life Science, I think, continuing to drive in the DH in DSIP will be important for our sector. So I think, yeah, the opportunity will be probably that quicker transmission between the desire for growth and the sector, and not having another group that is going to have that with less focus. Having said that, there are bits of NHS England's activity around specialised commissioning and some of the innovation work where they have been, I think, impactful, and it's vital that we make sure that schemes are not slowed down as a result of organisational change.
Thank you. Great insight there. Thank you very much, Steve. I think that's all the questions. So we're going to move on to say goodbye, if my slides will let me. If you are not already a BIA member and you're keen to support us in our influencing work, connect to other members in our community through our great events, and indeed save money on your lab supplies and many other things, please do contact us, reach out via bioindustry.org, and we'd be very keen to chat to you. We can only do this because of our members' support and their engagement with us and collaboration with us.
Cool. Thank you particularly to our annual supporters, AstraZeneca, Avantor, delivered by VWR, Cooley, Cytiva, HSBC Innovation Banking, Johnson & Johnson, and LifeArc. It's really fantastic as a result of your support that we can continue to do things for the broadest community possible. And I hope you found this helpful. Any feedback is always good. We'll do a deeper dive into the industrial strategy and the sector plan in about a month. But hopefully this has given you an update, some food for thought, and you can see what we are working on. Do please continue to input into those consultations if you've got expertise or a company view. It's always useful from our perspective, and if members are active and engaged in some of these fairly technical conversations.
Right. Thank you very much for listening, and have a good weekend.
Thanks all. Bye.